Let's talk about money, a staggering amount of it. Not just the kind of money you find in your wallet, or even the kind that fills a bank vault, but a sum so enormous, it's almost hard to imagine. We're talking about numbers that stretch beyond what most of us will ever see in a lifetime, numbers that shape the fate of entire nations. The US government just announced it needs to borrow $514 billion. That's right, over $500 billion, all in one go. This isn't a routine loan or a minor budget adjustment, it's a financial move that sends shockwaves through the halls of power and the markets around the world. To put it in perspective, that's enough to buy every NFL team several times over. Imagine owning not just your favorite team, but the entire league and still having billions left to spare. And if you're feeling extravagant, you could even throw in a golden White House, complete with luxury cars and enough gold bars to make Fort Knox jealous. When a number this big appears, the obvious question is, why? Why does the government suddenly need such a colossal sum? Is it a sign of trouble or just business as usual for the world's largest economy? This isn't just a number on a spreadsheet, it's a real debt with real consequences. Every dollar borrowed is a promise to pay back, with interest, and those promises add up over time. The impact ripples out, affecting everything from interest rates to the value of the dollar in your pocket. The government is putting a massive expense on its credit card, and like anyone maxing out their limit, the big question is how they'll pay it back. Will it mean higher taxes, spending cuts, or just rolling the debt over to the next generation? This sudden borrowing spree is about promises made, bills coming due, and the complex way the world's largest economy manages its finances. It's about keeping the government running, paying for programs, and meeting obligations both at home and abroad. The Treasury's announcement is a plot twist in America's fiscal saga, not just for its size, but for how quickly the need arose. It's a reminder that even the most powerful economies can face sudden, urgent demands for cash. So, let's untangle why the government suddenly needs a cash injection the size of a small country's GDP, what triggered this urgent borrowing, and what it means for all of us. Whether you're an investor, a taxpayer, or just someone trying to make sense of the headlines. Because when the world's largest economy makes a move this big, the effects are felt far beyond Washington, rippling through markets, households, and the global financial system. On April 28, 2025, the U.S. Treasury calmly announced it would borrow $514 billion between April and June. The announcement, delivered with a sense of routine, masked the sheer scale of what was unfolding behind the scenes. This isn't just a number on a page, it's a staggering sum that will ripple through the entire economy, affecting everything from interest rates to the value of the dollar. That's nearly double their January estimate of $278 billion, a massive miscalculation. Such a dramatic revision in just a few months raises eyebrows among economists and investors alike. It signals that the government's financial outlook is shifting rapidly, and not in a reassuring direction. Imagine budgeting for a weekend trip and realizing you need enough for a Mars mission. That's the scale of the surprise here. For ordinary Americans, it's like planning for groceries and suddenly being told you need to buy a spaceship. The gap between expectation and reality is enormous, and it's causing confusion and concern. The news didn't just stay in government offices, it exploded across headlines and newsrooms, sparking debates about what led to such a huge shortfall. Was it unexpected spending, lower tax revenues, or something deeper in the economy? The uncertainty only added to the anxiety. This leap sent shockwaves through financial markets and raised serious questions about fiscal management. Investors scrambled to reassess their strategies, and the stock market responded with volatility. The sense of stability that markets crave was suddenly in doubt. The Treasury also projected another $488 billion in borrowing for the next quarter. That means the borrowing spree isn't a one-time event. It's set to continue, putting even more pressure on the government's finances and the broader economy. In just 6 months, the U.S. government is set to borrow over $1 trillion. To put that in perspective, that's more than the GDP of many entire countries. It's a level of borrowing that would have been unthinkable just a few years ago. These aren't numbers you see in times of prosperity. They signal crisis-level spending. Such figures are usually reserved for emergencies, like wars or deep recessions, not for periods of supposed stability. It's a clear sign that something is fundamentally off in the nation's finances. At the end of March, the Treasury's cash balance was $775 billion, well below their target. This shortfall means the government is running low on the cash it needs to pay its bills, making the need for new borrowing even more urgent. To keep the government running, they need this massive infusion of borrowed cash. Without it, essential services could grind to a halt, and the ripple effects would be felt by every American. The numbers may seem abstract, but their impact is very real, and the stakes have never been higher. Why does a government that prints its own money need to borrow? It's about the gap between what Congress authorizes to spend and what the Treasury actually has. The government's income comes from taxes, but spending covers everything from defense to Social Security. When spending exceeds income, that's a budget deficit. To cover it, the government issues Treasury bonds, selling them to investors worldwide. Investors get paid back with interest, making U.S. debt a historically safe asset. But as debt grows, so do questions about how long the world will keep buying. If demand for U.S. debt falters, the consequences could be severe. So, what caused this sudden financial gap? Why is the U.S. Treasury suddenly scrambling for cash, and what's really going on behind the scenes? To understand the urgency, we need to look at the complex web of government finances and the unexpected shocks that have hit the system all at once. The Treasury blames two things: lower than expected tax receipts and higher than expected spending. But the story goes deeper than just numbers on a spreadsheet. These aren't just abstract figures. They reflect real changes in the economy and government policy that have collided at the worst possible time. In plain terms, the government collected less and spent more. Tax revenues, which are the lifeblood of government operations, have fallen short of forecasts. This means less money is coming in to pay for everything from infrastructure to social programs. A slowing economy means less tax revenue, as businesses earn less and workers see smaller paychecks. When economic growth stalls, the government's income takes a direct hit, making it harder to balance the books. And past tax cuts, which were meant to boost growth, can actually shrink government income even further if that growth doesn't materialize. The result? A bigger gap between what the government brings in and what it needs to spend. On the spending side, programs like Social Security and Medicare keep growing, driven by an aging population and rising healthcare costs. These are commitments the government can't easily cut, so spending keeps climbing year after year. And rising interest rates have made debt payments much more expensive. Every time the government borrows, it now has to pay higher interest, which eats up even more of the budget and leaves less for everything else. Political gridlock over the debt ceiling adds chaos, making it nearly impossible to plan ahead. Lawmakers argue, deadlines loom, and uncertainty grows, all of which rattles financial markets and government agencies alike. This gridlock forces the Treasury into unpredictable borrowing, as officials scramble to find ways to keep the government running without knowing when or if Congress will act. These factors combine to create a perfect storm: less money coming in, more going out, and higher costs to service old debt. It's a recipe for financial stress that can quickly spiral out of control if not managed carefully. The government now faces not just a shortfall, but a mounting pile of obligations that must be paid no matter what. Every day the gap grows, the pressure on the Treasury intensifies. The result? A sudden massive need for cash. The Treasury must act fast to avoid missing payments or defaulting on its obligations, which could have ripple effects across the entire economy. It's a financial double whammy that's left the Treasury scrambling, working late into the night to find solutions and reassure nervous investors and the public. The debt ceiling drama only makes things worse, disrupting normal cash flow and creating even more uncertainty about the government's ability to pay its bills on time. It's a self-inflicted wound in an already tough fiscal environment, and unless action is taken soon, the consequences could be felt by every American, from Wall Street to Main Street. Let's address the tariff question. Did Trump-era tariffs cause this borrowing spike? The Treasury didn't cite tariffs as a direct cause. Instead, it's about lower tax receipts and higher spending. Tariffs are taxes on imports, meant to raise revenue, but their broader economic impact is complex. While tariffs bring in money, they can also slow the economy by raising costs for businesses and consumers. A slower economy means less tax revenue, potentially offsetting any gains from tariffs. So while tariffs aren't the main culprit, they're part of a bigger economic picture that affects government finances. The real issue is a mix of trade policies, tax cuts, and rising spending. The debate over tariffs' net impact continues, but they're just one piece of a much larger puzzle. This $514 billion borrowing is just one chapter in the U.S. debt story. The total national debt now tops $34 trillion, more than the entire U.S. economy produces in a year. Decades of spending more than we take in have built this mountain of debt. Annual deficits are now in the trillions and interest payments are skyrocketing as rates rise. Hundreds of billions go just to pay interest, money that could fund schools, healthcare, or infrastructure. This creates a vicious cycle. More borrowing leads to higher interest payments, which leads to even more borrowing. Experts warn this path is unsustainable and risks a future fiscal crisis. The current borrowing isn't an isolated event, it's a symptom of a chronic worsening problem. The U.S. is running out of room to ignore its debt. Trillions in government borrowing might seem distant, but it hits home. When the government borrows more, it often has to offer higher interest rates to attract buyers. That pushes up rates on mortgages, car loans, and credit cards for everyone. As more of the budget goes to interest payments, there's less for public services like education and infrastructure. Politicians may face tough choices, cut spending or raise taxes. If debt keeps growing, it could erode confidence in the dollar and trigger inflation, shrinking your savings value. The national debt isn't just a government problem, it affects your wallet, your future, and your financial security. Managing it is about protecting both national and personal stability. Economists and fiscal watchdogs are sounding the alarm. The U.S. fiscal path is unsustainable. Massive deficits during good economic times are unprecedented and risky. Experts warn that political dysfunction like debt ceiling standoffs adds dangerous uncertainty. Public concern is rising, with more Americans worried about debt and demanding accountability. Financial experts use terms like fiscal cliff and debt spiral to describe the risk. The message is clear. The longer we delay action, the more painful the fix will be. The $514 billion borrowing is just the latest warning sign. The U.S. needs to borrow $514 billion this quarter, a stark reminder of its precarious finances. This isn't the result of one bad policy, but decades of overspending, tax cuts, and political gridlock. The national debt affects everything from interest rates to public services. The choices made in Washington ripple out to every household. The U.S. faces a crossroads: keep borrowing and risk crisis, or make tough choices to restore fiscal balance. That means honest conversations about what government should do, and how to pay for it. The $514 billion question isn't just about this quarter, it's about the nation's future. It's a wake-up call to decide what comes next.